Hello everyone, this is today's video analysis for April 24th, 2019. Today we're looking at the GBPUSD Greater British Pound versus the US dollar for today's trade analysis. We're looking here at the daily time frame and we're seeing something new that we haven't seen in quite a while, which is the breakdown of a former support. If you look at the green shaded area here, somewhat towards the top middle of the chart, right around 1.2950, 1.2985. It's where the two moving averages, by the way, converge right into that green shaded area. If you follow it back, I put some black circles here on the chart, and you can see that the market clearly has found support here above the 129.85 for quite a while. Let's zoom it in one time here. And you can see that clearly support, 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 support. Past couple of days we sat here as support, but now we're seeing something new and different where the market is now under the green shaded area 2950. So once it breaks through that support, that same support level becomes a potential resistance area. And we've seen that before. If you look right here, and I'm just going to take this one off, where the red circle is, it was coming down, got underneath the green zone. Once it got under the green zone, never got back above inside the red circle, and then continued to the yellow in the orange zone. So that's somewhat of our theory here, is that once it gets under the green zone, it won't get back above it. So we're going to begin using that as a point of reference, as a resistance. And the risk is it gets above again. So we now know, similarly to the red circle back here, that as long as it stays under the green zone 2950, 2985, we're going to begin looking at that as resistance and the potential of short opportunities underneath there. It is interesting that it's also where those two 100 and 200 period simple moving averages converge right there into that area, and that also gives us a clue to watch. As long as it stays under those two moving averages, they help us identify this area as resistance as well. Now, we don't know what today's candle holds. Today's candle may turn into a very large bullish candle, a very large bullish engulfing style candle, and be back above 29.85 by the end of the day. We just don't know. So that's kind of the setup we're looking for. We need it to stay. We're going to gain more confidence, let's say, that it's going to continue to go down if the daily candle can stay underneath the green shaded area 129.50.85. If by the end of day today it's right back above it, we could be looking for a reversal to go back higher again for the pound dollar. So very interesting scenario setup here happening, that something new that hasn't happened for quite a long time along this green shaded area. So as long as it's under there, I think we begin looking for opportunities to go short with our risk and stop loss just above the green shaded area. Take it down to the 4-hour time frame, and you can see some more clear evidence of it being underneath that 2950 level. It sat down on top of it for a while. We saw a sudden infusion of sell orders. They're just now sitting up underneath here. And so again, it doesn't change our mind about it. We'll gain confidence when the daily stays under the green zone, but we're still looking at this as a potential area of a breakout and a continuation lower. Again, there's that red circle right back there, and let's squeeze that red circle in again. There's the area that we're kind of looking at. Once it got underneath, and we'll just pull that in there a little bit. Once it got under the green zone, it never got back above and continued to go lower. So if we look at that red circle again as our clue, that's somewhat we're looking at over here on the right hand side under the green shaded area. So selling underneath there becomes a potential intraday opportunity as long as it's under the green zone. Stop loss, if you decide to do that, is going to be above the green zone, so that way if it does turn around and go back in the other direction, you limit the impact to your trading account. And again, it's very similar to other opportunities here. Here it is again. Let's just take this black circle right here. Once it got under the blue zone, it never got back above and continued to go lower. So if you look at this smaller black circle inside the black box, that's the similar situation that we're talking about right now. If I bring this one down to our current area, and if you look at those two small circles, that's the similar situation that we're looking at. And that's what traders do. We look for the future or current market to do a similar thing that the historical market did. It doesn't matter what indicator you're using, price action, Fibonacci, pivot points, MACD, you're still looking for the future or current market to do the same thing that the historical market did when that setup or when that scenario took place in the past. If it did that back there, you expect it to do something similar in the future. And that's what we're looking at here. Similar scenarios where it broke under the blue zone, we're under the green zone, and we're looking for the continuation of the downtrend. And the risk is the market turns back around and goes back in the other direction. And so we always will use appropriate risk strategies in every trade scenario.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.